Hong Kong has long been renowned for having some of the highest real estate prices in the world, often topping international indices for both residential and commercial property costs. This is because its status as a global financial hub, coupled with its limited usable land area, has historically led to a near-constant tension between supply and demand. Here's a graph on the median multiple of Hong Kong. The median multiple measures the ratio of median house prices to median household income, and Hong Kong consistently ranks among the highest globally. And as you can see, the cost of real estate in Hong Kong isn't just the highest in the world, it far surpasses any other economy by far. Comparing it to Singapore, which has similar challenges, one can wonder just why Hong Kong's government has left this issue gone unfixed. But regardless of what has occurred so far, what is far more important about Hong Kong's real estate is that it's experiencing a very painful slump. Here's a graph on the residential property prices which showcases the decline in Hong Kong's housing market. After years of soaring prices, the market has entered a downturn, with property values dropping significantly. Here, one can see that even in the latest quarters available from the first to the third quarter of 2024, the real estate residential property prices have continued to post double-digit declines. This is quite the shock, isn't it? Hong Kong, after all, has always been the most sought-after real estate market, buoyed by domestic buyers, expatriates, and mainland Chinese investors. If we graph out the property price index since the start of the 21st century, we get to see that property prices have always been increasing. So, with this slump, many people are wondering what's causing this. Is this related to the overall real estate slump in China? Or is it because of the changing global economic environment that we are currently experiencing? Well, let's talk all about the problems that Hong Kong is facing. The very first problem that is hitting the real estate industry in Hong Kong can be no other than global interest rates. If we graph out the Federal Reserve interest rate in the United States, we get to see just how fast it has gone up in a short amount of time. Here, you can see that US interest rates have gone up to more than 5%. But what does this have to do with Hong Kong? It's the fact that Hong Kong's currency is pegged to the US dollar. This means that whenever the US Federal Reserve raises interest rates, Hong Kong is forced to follow suit. If we graph out the interest rates set by the Hong Kong Monetary Authority, we get to see that Hong Kong's interest rates have a similar pattern to that of the United States. And the problem with having high interest rates is because it makes borrowing costs rise as well. Interest rates that are set by the central bank or monetary authority, after all, is a key factor that determines the cost of borrowing for individuals, businesses, and developers. When interest rates rise, the cost of taking out a mortgage increases. So, with higher mortgage costs, it makes sense that there would be a decrease in demand. On top of that discouraging borrowers, the fact that interest rates are high not just in Hong Kong and the United States, but globally, then it has caused a slump in demand for many expatriates and investors, which have also contributed to the overall decline in demand for Hong Kong properties. Now, on top of the interest rate challenges, there have also been problems with oversupply in the market. Yes, that's correct, even though, historically, there have been more demand, and with little supply in Hong Kong, the exact opposite is now happening. Here's a graph on the office availability rate in Hong Kong, which showcases a sharp increase in vacant office spaces. Here, you can see that from 2016 to 2017, office availability rate has ranged between 6 to 7%, meaning that only a small portion of office spaces remained unoccupied. However, in recent years, this number has skyrocketed, with office availability rates reaching over 19.6% as of the first quarter of 2024. That's a huge increase, and this shows just how demand has disappeared from the Hong Kong market. What's worrying about this is the fact that there have been recent completions in both the office and residential sectors, which have added to the overall inventory levels of Hong Kong. Due to this increased supply and weakening demand, it has caused downward pressure on prices. Some reports even say that Hong Kong, which has always faced a problem for its limited land supply, has forced some developers to offer significant discounts to clear unsold inventory. Now, thirdly, there's also the problem related to politics. Some analysts suggest that Hong Kong's real estate market has also been affected by political uncertainty. After the 2019 to 2020 protests and the subsequent national security measures imposed by Beijing, many investors have grown cautious about the territory's long-term stability. This is partly the reason why, if we graph out the office availability rate in Hong Kong again, we get to see that just prior to the COVID-19 pandemic, office availability had already increased in the fourth quarter of 2019. And on top of this political uncertainty, there also has been an increase in emigration. Many people have left Hong Kong, but what's far more worrying is the fact that a report from the Henley Private Wealth Migration Report said that over 1,000 high-net-worth individuals had left Hong Kong in 2023. This basically means millionaires are also leaving, carrying their money, which has long been a reason for Hong Kong's economic strength. And finally, one last reason for Hong Kong's real estate slump can also be attributed to the ripple effects on banks and developers. The property slump has not only affected home buyers, but has also rippled into the financial sector. HSBC, for example, saw its credit-impaired loans on commercial real estate in Hong Kong surge nearly sixfold to over $3 billion in the first half of 2024. Rising defaults on property loans have increased the risk profile for banks, even though many borrowers are still servicing their debt. Likewise, major property developers are feeling the squeeze. New World Development, one of Hong Kong's prominent developers, reported a staggering net loss of over $852 million in the first half of 2025, with its market capitalization falling by more than 80% since mid-2019. High debt levels, coupled with falling property values, have left many developers with high net gearing ratios and looming debt obligations that are increasingly hard to meet. These pressures can lead to asset write-downs, restructuring, or even default in extreme cases. So, as you can see, the real estate slump in Hong Kong has been caused by many factors. Now, let's talk about what the impact is to Hong Kong's economy, and why it is bad, and some reasons as to why it is good. The biggest problem that the real estate slump would cause is no other than its impact on government revenues. Here's a graph on the revenue from land premium of Hong Kong's government. What this data shows is how much revenue the Hong Kong government collects from land premiums, which are fees paid by developers to acquire land for construction. And here you can see, historically, land premiums have long been a contributor to the government's revenue. But for the latest year of 2024, the city is going to experience a significant slump. To show you just how big the impact is, let's graph out the government revenues of Hong Kong in the 2021 to 2022 budget. Here, you can see that land premiums have contributed massively with over $97 billion. That makes them much more than stamp duties, salaries tax, and investment income. But if we graph out the government revenues from 2024 to 2025, we get to see land premiums drop and become the least contributor amongst the revenue sources of the Hong Kong government. So, this slump in real estate is indeed going to hit the government the hardest. Another impact would be property prices. When property prices fall, it causes a chain reaction across the entire economy. For many homeowners and investors, they would see their property values decline. Many people in Hong Kong rely on real estate as a key form of wealth, and a drop in prices means their net worth shrinks. But while that can be a problem to these homeowners and investors, there's actually a good reason why it might be okay, and it's the fact that home prices have helped decrease the median multiple of Hong Kong. If we graph out the median multiple of Hong Kong again and see the latest data, we get to see that the affordability of Hong Kong has become better. Here, you can see in the graph, the house price-to-income ratio has decreased significantly from 15.3 back in 2021 to just around 10.3 in the latest months available for 2024. That's a big drop, And, for the first time in decades, housing in Hong Kong is becoming more accessible to a larger portion of the population. So, Hong Kong's real estate slump is due to many factors, and its effects can either be bad, depending on your situation, and it can be good if you're looking to buy real estate. But anyway, do let us know what you think. Thanks for watching.